Good morning. Welcome Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of December 8th, 2025. Let's get started. SEAF signals for this week. We got energy, industrials, and technology. Technology comes back after having a little bit of a weakness on that tactical month, but showing strength in the strategic quarter and the trading week. Energy coming up through solid trading week and tactical month scores, and industrial stays the signal with just general strength across all three time periods. Healthcare took a little bit of a nosedive here with trading week going down to 11 after showing strength in both the tactical and the strategic quarter. We'll take a look to see if this is a mere break for healthcare after a nice strong run, or if we're starting a new trend. That'll happen a little bit later in the rainbow charts. And consumer discretionary pops up with a strong trading week, but is held back by its tactical month and strategic quarter here, keeping it in the neutral time frame. Financial sits toward the bottom here at 31. Looking at our heat map, like I mentioned earlier, technology looking relatively strong, 0.33 on the trading week, with consumer discretionary coming at 0.25. An outflow of negative 0.37 for healthcare, making it the worst on the week after showing some real strength over the last couple of weeks. Healthcare, again, let's take a look. See, is this a new trend for healthcare, or are we taking a little bit of profit taking going on? Energy showing some strength again after kind of bouncing in and out, and kind of financials kind of buried here. Overall, we had four of 5 days were up in terms of inflows into the 11 sector spiders for 0.64% increase. We are nearing, and we'll actually click over there now, we're nearing to the high mark of, this is $342 billion. If you add up all 11 sector spiders, AUMs, you get this lovely large number, and we're starting to approach that. This is a high mark for the 11 sector spiders. As of right now, we're above that 21-day moving average, having taken a brief interlude below, which kind of corresponded with this down move in the S&P 500. And again, if we're looking at this chart, we add up the 11 sector spiders AUMs, we track a 21-day moving average. In general, when this thing's above its 21-day moving average, it has, the S&P 500 has room for price appreciation. When it's below the 21-day moving average, we tend to see a little bit of negative decline in the market. Right now, we have a little bit of green skies here as we approach this hotter water mark. I think we're about 340 billion right now. 342 is the number that we're kind of headed into. Heading into our rainbows. We will start with healthcare. As we said, as I mentioned, we had a nice little run up with healthcare for its relative outperformance versus SPY as we were sitting in these upper favored. Took a little bit of a decline, as you can see, that corresponded with a downward move in the relative performance versus SPY. As we saw assets kind of flow out of there with that 11 on the trading week. We do have some support here for the relative performance side of this chart versus SPY for healthcare. So it'll be interesting to see if we rebound. Still technically a favorite sector due to its strength in the tactical month and the strategic quarter with 1 and 2. We had a nice amount of accumulation here with these two time periods. So again, we'll see what healthcare does. It is not a SEAF signal anymore. It dropped to being 4th overall. With strength of this kind of hard hard outflow during that trading week, and we did a little bit of a swap here with technology. Industrials sitting into that middle favored period. Nice little move. Seem to have a little bit of a turn in the relative performance versus SPY. It's pointing in the right direction, although a bit still in that downward trend that we had going back to, looks like August of this, July, August of this year. But overall, seeing some money flowing in through 0.16 on the trading week. Good for 4th overall. Just relatively strong numbers across all 3 time periods, although not the strongest accumulation. But the way the SEAF model works is it really lets you know where the money is going. So right now, money is flowing into industrials. We can see a little bit of relative outperformance just on the short term for that time period. But industrials currently SEAF signal, good place to be. Technology. Technology at an abrupt stop here. It looks like it stopped right on the support that we had established in July here. This is the relative outperformance versus SPY. Right there, stopped and turned around. We saw a nice strong inflow that got us up into that lower favored territory. Again, being held back by this outflow on the tactical month. Overall, though, technology looking like it's going to rebound a little bit here. So we're seeing some good things at tech. Like I said, 0.33 on the trading week. That's pretty close to our 0.4. So a significant amount of assets flowing into technology got us up into that low favored. So, a real push back into this upper favored can really show, resume leadership for technology. Right now it's kind of getting its feet back under it. So technology, a good place to be, and a SEAF signal for this week. Energy. Energy has been doing what energy's been doing for the last year. We get a strong inflow of cash. It comes flying out. It looks like we're doing that here. We got up into that middle favored territory just a couple of weeks ago, crashed down through neutral, held, and now we're back into favored. Energy is our top in the SEAF model this week. With strong trading week and tactical month in terms of accumulation. Energy is still looking good. Ideally, it's got a lot of resistance on the relative performance side of this chart, and would really need to see some sustained flows. Energy has been trying to break out, I think, going back at least a year, if not more. We've had these little brief periods of relative outperformance that we can see here as we spike up from a void into either neutral or low favored. Really would be looking for some sustained things from energy. This is a little bit encouraging as we're right back into favored versus, where we had these longer couple of month periods. So energy looking like another good place to be, and hopefully another launching pad here, which been a relatively underperforming sector for quite a bit of time. Last but not least, I just wanted to bring up consumer discretionary, as it was 2 on the trading week. Seeing a little bit of life, kind of stopping here. We've been in that sideways pattern for consumer discretionary for a little bit of time now, hitting in that lower or mid neutral, kind of being held up by its tactical month and its strategic quarter with 8s in both of those. But again, showing a little bit of life, seeing a little bit of positive appreciation on the relative outperformance versus SPY, though we have this big box that we've been trading in, really going back to March of this year. So we need that extra oomph of the asset flows to come in here and kind of push us up through there, get us up into that favored, and we could be off to the races. But as of right now, not a SEAF signal yet, but we are knocking on the door, and it's nice to see that little price appreciation versus SPY going on in this last week or so. That is all I have for this week. I look forward to breaking down the SEAF model with y'all next week, and thank you.